Good afternoon, traders. This is Tony D from easyMarkets in the dealing room in Sydney. Update for today: we've had a fair bit of movement in the Bitcoin today. So far in the Asian session, has dropped back below 6,000, on track to test some of those lows of the year towards 5.8 and 5.7. Some of the reasons given is rumors of some potential extra regulation coming out of China. That was sort of pre-game when the market was falling. Haven't really seen any extra confirmation on this though. Sometimes there's just rumors that go through in the Bitcoin market. It's very much a whirlwind there, so you really do need to stay on the Twitter following the crypto channels there to make sure you do get the news as it comes. There's been a stabilization under the 6,000, haven't yet broken back above it though, so a little bit under pressure now. It's been under pressure for a while, still searching for that base, and so is Ethereum and Ripple. So it's in the middle of a bear market sort of mood at the moment. Until we get some good news, I suppose that is the way it might stay, but as it gets lower and lower, it does get more and more attention from the longer term traders. In terms of the Lira crisis, we've had a fair bit of movement coming through overnight in some of the other emerging currencies, but dollar ZAR, although it opened up 10% weaker, has remained fairly stable at the highs. You can see that when you're looking at the market here, that the 7 level has been a little bit of a lead at the moment. 7 level is important because that's when some of the banks become a little unprofitable, a little bit in trouble. So terming and watching this 7 level, see if we break above it or go below it. There were meetings between Turkey and the US overnight. Didn't resolve any issues though. You did see the market still remain under pressure. And seems to be quite stubborn in terms of negotiating what is potentially going to be the icebreaker, which is the release of the pastor there in Turkey, the US citizen. That seems to be the sticking point. From there you could see a recovery, given the market dropped 30% in 2 days. Recovery is very likely at some point. It's just a matter of when the pressure is taken off. So keep an eye on it, because it does have a big impact on how we play the risk assets. You are seeing a little bit of recovery coming through in the risk assets though in the stabilization. So Euro Yen is probably the most heavily hit in the selling last week. Has had a nice little bounce overnight, around 100 pips off the lows. This is led mainly by the dollar yen, but also a little lift in the euro itself, gradually grinding up. And the dollar yen had a big reversal from the 110 level. Really quite sharp actually, a little bit catching some of the traders who are selling here because of the potential for this to become an ongoing crisis, a little on the guards. Now we haven't broken any of the key levels, but if we get back above 111.20, a lot of the downside pressure will be released. So it's only another 30 pips, very pivotal for this pair in the next couple of hours, whether we do break that or not going into Europe. And now in terms of the stock markets, although they did finish a little bit negative, they have not really seen the heavy selling that you would expect if there was a contagion that was of the fearful kind yet for the Western markets. It seems to be contained pretty much to the emerging markets where you are seeing the currency weakness. Even in those markets where you do see currency weakness and the stock market not going down, that's really where there's some value in some of the stocks in US dollar terms. If your currency drops 10% and nothing else has changed, you do have 10% cheaper stocks. So you are seeing stock markets not exactly negative in some of these emerging markets. In terms of the dollar CNH, we used to CNY and CNH, we used to watch this for day-to-day movements in what's going on, in particular with gold. It is still underneath the 7 level, so it hasn't broken any of the key line in the sands that China has sort of put out there. Very similar topish stalling action up here, very similar to the dollar Lira, and so you're seeing the market a little bit more towards stabilization. If we do all break higher on Lira and in the dollar CNH, definitely the risk assets will come under pressure a little bit more aggressively in the future. So it's something to keep an eye on. Either we pull back here or we do all as a group break higher, and that will have a lot of impact on what we are playing. In terms of the traditional risk asset safe haven that used to get a lot of support when things were going wrong, gold, it is underneath 1200, so year lows. Really has broken away from being a safe haven and is much more reactive to US dollar strength and weakness and positioning in general. Definitely less demand at the moment for gold, and we're seeing it fail on the top side in the rallies. And yesterday didn't really have a bounce off the 1200 at all, and it closed underneath it. So it's looking pretty shaky here. Have to see if we want to continue lower. It's had a fairly decent fall. This is the weekly graph we're looking at here. We're down at 2016 levels now, and the fall is getting towards that $170 mark, which is quite large by most gold pullbacks, and without some sort of major extension here from say US dollar strength and euro weakness, and it would be a little bit hard to see we're going to below that, say 1160, 1150 level. But you could see these things. Gold markets have surprised in the past in terms of their ability to trend longer than many other currencies. You've seen this is the size of the fall that we got in the previous Chinese devaluation. So really a lot of this does depend on whether the Chinese yuan stops falling. Whether we do get down to the lows from 2016, which was closer to that 1130 level. Alright guys, we'll have an update tomorrow. Keep your eye on the Lira, keep your eye on the dollar yuan for the risk asset trades. If you do want to have a further chat, there's some interesting crosses that have come into play, particularly Aussie Kiwi has got a nice divergence play between the central banks. Do give us a call on numbers below. If you're not a member of the easyMarkets dealing room and you do want assistance from a trader with your openings and exits, and also just strategies and maybe a little bit of risk management assistance, do sign up on the link below, and someone like myself will call you and see if we can assist.